Do you know that Qatar, a country of less than 3 million people, is one of the richest countries in the world? Why is that so? Okay. One thing is because they don't only keep their money in Qatar, they invest it all over the world. They invest in Volkswagen, they invest in Harrods in London, they invest in banks, they invest all over. They invest in London, in New York, so they invest all over. And that is part of the secret to their wealth. So it's not just the wealth they got from oil that is keeping them afloat. This is because Qatar understands something very powerful, which is the power of diversification. So they don't just put all their investment into one basket of oil. They invest in real estate, they invest in automobile companies, they invest in Harrods. Like, they just diversify all their investments. And one thing we can all learn from this is the fact that if you really want to get even rich or comfortable or manage your investment well, you need to diversify. We've been talking so much about types of investment. Now we're going to talk about diversification. You have to diversify your investments. Qatar became rich through oil after they discovered oil in the North Field, one of the world's largest natural gas reserves. Their wealth skyrocketed, but instead of just doing anyhow, they created a sovereign wealth fund called Qatar Investment Authority. It's managed by that investment authority. That fund is worth over $500 billion. And like I said, they invested in diverse investment. They invested in automobile. They invested in real estate in New York. They invested in Harrods in London. And they invested in airline, one of the largest airline in the world. And this just makes them even richer. So one of the things we can learn from this is diversification. They didn't just stay with just oil. They used that oil money and then you continue to invest it. So even you knowing that you're saving and you're getting, you have to invest, you have to diversify. And even Nigeria as a country can learn from. Imagine all the money that we've been having. We even had something similar where we are investing. Maybe by now they're having a surplus budget. They say that the deficit has been running for years. Yeah. So some of the investment that they did, they invested in Volkswagen in Germany. And guess what? They built that Barclays Bank in 2008 and they invested there. Start 2008 financial crisis. They invested in Barclays. They invested in real estate in Singapore, in New York, and they invested in Harrods. So all these investments are what keeps their fund multiplying. To reduce their oil risk, their concentration risk, because yes, their source of wealth is highly concentrated from oil. That's why they did that diversification. And they also know that oil won't last forever. So now they are prepared for the future. Whatever happens to oil, they are safe and they are secure. So that's what you have to start thinking about when you are doing your investments. You cannot store your investment in one basket. You will suffer concentration risk. So that's one of the lessons you can learn about your investment from Qatar today. And also, why does that diversification matter? They learned that one income source is dangerous. And guess what? Oil prices move up and down. And you can also see Nigerians' budget also moving up and down because it's pegged against crude oil. But Qatar, because of this diversification, they are not as affected by those oil movements, the volatility, as Nigeria is. So you too know the percentage of your investment you want to put in a certain bucket, so that when there's volatility, when there's up and down movement, which is what we call volatility, your heart will not be doing, you'll be safe and you'll be secure. So that's one of the lessons you have to learn today, diversification. So you have to learn how to classify your investment into different buckets so that you don't suffer concentration. How can you copy this type of investments even as a country and personally, like I say, you can always replicate it. What you start with, like we discussed, you have to have some safe investment. Then you have to have some growth investment. Then you have to have some global exposure. Then you have to have real estate. So when we're talking about all these investments, asset classes and everything, what we're trying to teach you is that you have to have exposure to all this four so that you are able to enjoy and gain benefits from everything. Safe investment, we mentioned so much that I'm sure you know them offhand by now, the treasury bill, fixed deposit, bonds, yeah. The growth investment, mutual fund, index fund, we've not really talked about that, stocks. The global exposure, you have to have dollar savings. You have to start thinking about Eurobonds. You have to start thinking about how you buy stocks in US, cryptocurrencies. And then the last one is real estate. Buying land, buying houses, buying REITs, all those ones. And even starting side businesses. You have to diversify if you really want to maximize and get value for your investment. So that's what we're learning from today.